In the year 2001, one company controlled $101 billion. They were on the cover of Fortune magazine 6 years in a row, called America's Most Innovative Company. Their CEO shook hands with presidents. Their stock was in millions of Americans' retirement funds. And then, in just 24 days, it was all gone. Not because of bad luck, not because of a recession, because they lied. Every single number, every report, every press conference, a lie. And the people who did it walked away with billions, while their own employees lost everything. To understand how Enron destroyed lives, you first have to understand how they convinced the entire world they were gods. It started in 1985, Houston, Texas. A man named Kenneth merged two gas pipeline companies and called it Enron. At first, it was simple. Move natural gas, make money. Boring, normal, legal. But Kenneth had bigger dreams. He hired a man named Jeffrey Skilling, a Harvard MBA, sharp, arrogant, obsessed with one thing: making numbers look good. Skilling had an idea that would change everything. He told Enron, "We don't need to actually make money today. We just need to look like we're going to make money tomorrow." This was called mark-to-market accounting. Here's how it worked, and pay attention because this is how they fooled everyone. Normally, a company records profit when they actually earn it. Enron changed the rules. They recorded profit the moment they signed a contract, even if that contract wouldn't pay out for 10 years, even if that contract never paid out at all. The SEC, America's financial watchdog, approved it. And just like that, Enron could invent billions of dollars in profit, on paper. But mark-to-market wasn't enough for Jeffrey Skilling. Because here's the problem. When you fake profits, you also create real losses somewhere. And those losses had to disappear. Enter Andrew Fastow, Enron's chief financial officer. Fastow was a financial genius, but not the good kind. He created over 3,000 shell companies, fake businesses with fake names, with fake employees. Companies like Jedi, Shuko, Raptor. These shell companies had one job: take Enron's losses and hide them. Billions of dollars in debt moved off Enron's books like it never existed. And Fastow wasn't just doing this for Enron. He was personally profiting from these fake companies. $30 million went directly into his pocket. Meanwhile, what was Enron showing the public? Pure profit. Every quarter, every year. Analysts loved them. Banks gave them unlimited credit. Investors threw money at them. And regular Americans, teachers, nurses, factory workers, retirees, put their entire life savings into Enron stock because they trusted the numbers. The numbers were a lie. Here's what makes Enron truly evil. It wasn't just 2 or 3 people lying. It was an entire culture. Enron had a system called rank and yank. Every year, the bottom 15% of employees were fired. This created a toxic environment where everyone was terrified. Terrified of asking questions, terrified of raising concerns, terrified of saying, "Wait, these numbers don't make sense." One analyst, Chung Wu, sent an email to clients in August 2001. He said Enron stock looked overvalued, risky. He was fired the next day. And at the very top, Kenneth Lay and Jeffrey Skilling were selling their own stock, quietly, carefully, while publicly telling employees to buy more. Let that sink in. The men who built this lie were getting out while telling you to get in. By the summer of 2001, the cracks were starting to show. Enron's stock, once $90 per share, was quietly dropping. Skilling, who had been made CEO just 6 months earlier, resigned suddenly in August 2001. He called it personal reasons. That was a lie too. One woman inside Enron saw everything clearly. Her name was Sherron Watkins, an Enron vice president. She wrote a letter directly to Kenneth Lay, warning him, "I am incredibly nervous that we will implode in a wave of accounting scandals." Kenneth Lay ignored it. Then, in October 2001, Enron announced a $618 million loss and disclosed a $1.2 billion hole in shareholder equity. The stock crashed. Journalists started digging. A reporter named Bethany McLean at Fortune magazine asked a simple question: how exactly does Enron make its money? Nobody could answer. Within weeks, the entire fraud was unraveling. By December 2nd, 2001, Enron filed for bankruptcy. At the time, the largest bankruptcy in American history. $63 billion gone.
Now, here's the part they don't show you in business school: the human cost. 20,000 Enron employees lost their jobs overnight. But it was worse than just losing a job. Enron employees had their retirement savings, their 401k, invested almost entirely in Enron stock. And here's the cruelest part. In the months before collapse, while executives were selling their shares, employees were locked out of selling theirs. The company froze their accounts during a plan administrator change. People who had worked 20, 30 years lost everything. A woman named Linda Perez, an Enron secretary for 18 years, lost $300,000 in retirement savings. She was 60 years old. She had to go back to work at 60 years old because men in suits decided their bonuses mattered more than her life. So, what happened to the people who did this? Jeffrey Skilling, sentenced to 24 years in prison, later reduced to 14 years. He was released in 2019. Today, he is working on new energy ventures. Andrew Fastow, sentenced to 6 years. He served 5. Today, he speaks at finance conferences. Enron didn't happen because of one bad man. It happened because an entire system looked the other way. The accountants looked the other way. The banks looked the other way. The government looked the other way. And regular people paid the price. Here's what I need you to understand. Enron is not history. The same accounting tricks, the same shell companies, the same "look over there while we rob you blind" are happening right now. In 2026, different names, different logos, same game. If you want to know which companies are playing this game today, subscribe to The Money Shadow, because we're not done. We're just getting started.